Hello and welcome to the look ahead for Monday, the 27th of November, with me, Fiona Sincotta, Senior Market Analyst at City Index. Monday, it's Cyber Monday, so attention is going to be on the retailers. Cyber Monday is expected to be or remain the biggest day for holiday shopping. Expectations are for Cyber Week spending. So that's the 5 days spreading from Thanksgiving Thursday through to Cyber Monday. Spending across those 5 days is set to hit a new high in 2023. 12 billion is expected to be spent online. This is according to Adobe Analysis. That's up 6.1% year on year. Black Friday was set to see growth of 5.7%. So relatively strong numbers, particularly given the backdrop. And obviously, I'm just talking about online spending there. There's in-store spending as well. But as I said, strong numbers, particularly given the backdrop of high interest rates and relatively high inflation still. So there's going to be a lot of focus on those numbers, how retailers are holding up. We know they've just had their reporting for Q3, and the numbers have been pretty solid for the Q3 quarter, but the look ahead has been cautious. So there's definitely some sounds of caution over spending, consumer spending in this key holiday season. If we just have a look here, this is Walmart. Share price is going to be in focus. Now we can see there was that sharp drop as they reported their numbers. Again, that was down to the cautious outlook from the grocer and the largest supermarket in the US. Now on the chart, we can see that the price has found support there on that 20 SMA. It dropped from around $170 to $155, where it's currently trading. The 200 SMA is offering support around the 153 level. A breakdown there is really needed in order to bring that 151, the low from late September, into focus. On the upside, buyers are going to need to look to get over that 100 SMA around the 160 level in order to be able to push higher. Also, what we will be watching as far as economic releases are concerned, we've got China's industrial profits year to date for October expected to be down 9%. US new home sales are also due. And then we've also got commentary from ECB President Christine Lagarde. Now, we've had a quiet week as far as data is concerned for the Eurozone. German data, though, has been big. We've had data today showing that German GDP contracted 0.1% quarter on quarter in Q3. That was in line with the preliminary readings. We also saw the IFO, German business climate, actually improved for a second straight month. It just ticked higher to 87.3. Now that suggests that maybe second straight month of rising, that we have got a bottom in as far as the downturn in the German economy is concerned, and that things might be looking brighter for the start of 2024. As far as the euro US dollar is concerned, just bringing up the chart here, we saw that the pair broke out above that 200 SMA and pushed up to a high of 109.65. Now it's just eased off that high. It's been consolidating around the 109 level. Now we've had a lot of movement here. The euro US dollar has managed to push higher on expectations that the Federal Reserve is done with its rate hiking cycle. Now, data that we've had this week has showed that perhaps the Fed aren't going to necessarily cut rates as soon as the market was hoping. Jobless claims came in stronger than expected, and the minutes to the FOMC meeting were also slightly more hawkish than what the market was expecting. But back to the chart, buyers were going to be looking for a move over that 109.65 level to bring 110, the psychological level, into play. On the downside, I think as long as the euro US dollar remains above that 200 SMA, which is around the 108 level, then the bulls are going to be remaining in control. If it does break through 108, then that does bring in 107.50, which was the high from November the 3rd, into play. That's all from me today. And if you do like what you've seen, then please remember to like the video and do follow to get more videos like this. Thanks very much and have a great weekend.